Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and I'm going to be breaking down this week's price action and most importantly, talk about our upcoming week ahead. Let's get into it. As always, we'll be taking a look at broader markets. We'll take a look at what really moved the markets, what was the news, what the currency basket is telling us, and then most importantly, we'll take a look at some possible setups going into next week. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into this last week, what a roller coaster week. This is a week that felt like a long week because we started off on Sunday night with a massive gap lower in the markets. And then again, that was caused by the worries that the tariffs going to go in effect on the weekend. We heard that, tariffs going to go effect on Tuesday. And of course, by Monday, we got things resolved, or we got pushed for 30 days, and that again brought a nice relief rally in the market. So you can see that this is what we call a roller coaster move, where things are moving aggressively one way or the other. In that process, we are getting good opportunities. But at the same time, you have to be flexible with the markets because, it can be really bearish in one moment and then it's turned to be very bullish in the other moment. So it's very important to kind of keep up with that news because that tariff news is really what's driving the markets. Here we are Friday. We went from a relaxing Friday where, things dies down in the middle of the day to now really a busy day. Last week we had this tariff news that brought the markets down in the second half of the day. And here we are today. We got another news about reciprocal tariffs that's supposed to go into effect next week, against a lot of countries. Now, that brought the markets down. So you can see that we are in this tug and pull that we are seeing in the market. So this is where, risk on sentiment versus risk off sentiment. It's very important to keep a close eye on the broader markets because as those things shift, you see those shifts happening across the board. Now, let's talk about outside of what happened here in the currency market, the US dollar. Well, the dollar had a massive gap on Sunday, but you can see that thing did pull back and the bond yield. So we'll take a look at those two things individually, but we are seeing as the worries sort of, gets pushed or get kicked down the road, we see some relief rallies that causing the dollar to pull back, the yields to pull back. And then we also had the Bank of England, they cut rates by 25 basis points, but that was a dovish cut, meaning that they talk about that they'll be likely to do further rate cuts in the coming meetings. So that was a dovish cut. We definitely see weakness in the pound there. And then the most important thing we're going to talk about today is the Japanese yen. It's outperforming. And, a week like this, we are seeing a big move in the yen. And the question is, what's driving that move? Again, this could be a risk-off environment, but most importantly, I think there's that bullish bets on that hawkish Bank of Japan. So we're definitely seeing things kind of brewing up underneath, something to kind of pay close attention to. Let's take a look at last week events. There's definitely a lot to go through, starting with Jules job opening. That was slightly lower. So let's just kind of look at the most important one. So here we are, Bank of England. They got raised by 25 basis points. So that has a negative effect on the British pound. The employment report today. First of all, let's just take a look at the numbers out of Canada. That was a pretty strong number, looking at 6.6 from a 6.8. So that's a nice little drop over there in the unemployment rate. And look at that employment change. That's 3 times more than what the expectation was. Now, let's just take a look at what we saw in the U.S. So in the U.S., we had, initially there was a big whipsaw. And the reason why is that we got our 2-part report, or a 3-part report. The unemployment actually dropped to 4% from 4.1. So that's a good news. That's a good news that the Fed doesn't need to cut rates. That's what it tells us. Then we have the employment report, and that was slightly below expectation. But then we take a look at the hourly wage earnings, and that was higher than expected. So you can see that those 2 reports were bullish. A little dip in that employment that really got overlooked. Again, I think we got them when market digested that news. We got a big whipsaw, both sides. But at the end, you can see that those were all bullish news. So overall, we are seeing a continuation of that. The economy is doing well. Nothing has really changed. So that's the rhetoric we are getting from these employment reports. Now let's just take a look at last week's reviews, take a look at the numbers, and then see where the biggest move was. So let's just start with the broader market. So here we are, S&P. I mean, it's funny though, it looks like, it's a slightly down week, but this was a big, week when it comes to intraday price action. So S&P down, and then we have the World Stock Index slightly up. We got crypto down. We got gold, again, continues to be in that really bullish pattern. I mean, that thing is going parabolic there. And then we have the oil markets going down. So, these numbers don't do justice because, if you take a look at intraday price action, we had, those big percentage move down, and then we got a big move up. So there's a lot of back and forth that happened on an intraday basis. Now, if you take a look at the chart, now where are we as far as the outlook goes? You can see that every time we get above that resistance, we get knocked down. This was again last Friday, this was the last Friday when we got that big candle down. We gapped lower. We went up for 4 days, and look at that. We went down again on a Friday. So it's almost like a deja vu from last week. Now, are we going to gap again? Again, we don't have that deadline that the tariff's going to go in effect. So I don't see a reason why it's going to gap lower. But again, these are the markets where you want to be protected, where the stops are not a guarantee that's going to get you out if there's a gap. So sometimes maybe it's better to be in cash to avoid those kind of situations, especially for negative price action where the market gaps lower, the dollar spikes up. Want to be making sure that you don't get caught up on the wrong side of that. Now, as far as the direction goes, I mean, we are above the 20 to 50 to moving average. We are trying to get, every time it pulls back and rise. But then again, it's not really confirming there's a breakout yet. So we'll probably continue to be in this range bound price action till we get a true breakout. Now, let's take a look at the last week number. And again, when you look at these numbers, and same thing, these numbers don't do justice because we had a lot of intraday volatility. But this number, take a look at yen, 1.87%. I mean, this is a fabulous number. And look at that in comparison to the yen, a dollar. Dollar was down 0.93%. So this is, again, very interesting here. And, something we always pay attention to is the dollar turning lower. Because, we saw this play out like back in August of last year, where we had a big move down in the dollar yen, and that brought a lot of things down. So we'll take a look at the dollar yen chart and then see which way we are likely to go. But the big question is, and we'll take a look at charts and answer that question, is dollar topping out here? You can see that dollar had a nice little big move down. And even though we had a big sort of a risk-off day today in the markets, we didn't see the dollar really spike up higher on that. And I think that's because the yen is the one that's more active than the dollar. So that's something we're going to see continues into next week. The European currencies is really where it got hammered. I mean, Swiss franc, euro, and pound. These two currencies, as you can see, has held in much better. Now they are the one in the chopping block here. Now, what's doing better? We have the growth currencies. I mean, the Kiwi is the one that continues to be weak, but then we had the Canadian dollar, which did really well off the off that deadline push. We are getting a great price action towards the end of the week, so we'll see what happens with the CAD here, and then Aussie slightly higher as well. So a lot of movements, and it's all about doing the right pairing because you can do a dollar CAD and that moved down quite aggressively, and then you take a dollar yen. That probably had the best move. But regardless of that, like if you get the direction right, dollar yen against the Swiss franc, euro, pound, they all had some big moves. Now in the crypto markets, you can see that Bitcoin slightly down, and then other cryptos are down. Again, I'm not really seeing that massive bullishness in crypto. Bitcoin is the one that's holding ground. It's not really breaking out higher. It's not really breaking down lower. It's kind of stuck in that sideways range. So let's just jump into our market analysis, take a look at what the outlook is, and then take a look at some charts. So let's just start with our outlook. Well, like I said, we are still at a +2, but we are cautiously bullish here. And, and every time we get to the resistance, I think we need to sort of wait for that confirmation that when it's going to break out, because we already had few instances where it just pulls back right off testing that level. Now, if we take a look at outside of that, let's just take a look at the bond yields. So as you can see that the bond yields are kind of moving lower, but then today with that jobs report, the yields will jump up. So one of the things we're going to take a look at going to next week is that does the yield start to go higher because this whole employment report, really pushes the outlook for the rate cuts. Because again, when markets are doing great, employment is doing great. Why do we have to cut rates there? That's really where we are. We are in this little, good sweet spot in the markets where, we're not seeing a rush from these economic numbers that, the Fed needs to cut rates. So I think that's going to, diminish those bets for Fed to cut rates. But I think, with this little rally today, I want to see if this continues to go in next week. Now, taking a look at crypto, you can see that this thing is in a wide range. Overall, this is a crypto basket. You can see that it's kind of going down. If you take a look at Bitcoin, Bitcoin's kind of holding steady. Now, let's just talk about next week events. I mean, among all that volatility that we have on the docket with tariff news, we got to pay attention to the economic events as well. And most importantly, next week, we have the US CPI number. That's going to be important to watch. We have the PPI numbers out of the US. And then we also have some other numbers like the inflation expectation from Kiwi. And then we have some other numbers like retail sales. So next week is definitely lighter on the docket. This past week, we had all this volatility. On the top of that, we had central banks. We have all these economic reports. Next week is going to be less than that. So we can, mostly pay attention to what the broader markets are doing. So as far as the outlook goes, for next week, I think market volatility likely to continue as those headlines, moving the markets. And remember, those headlines, tariff news, it brings the market down. Things get resolved, brings the market up. So you're getting in this tug and pull. And so this is an important time to be making sure you're signed up for a new service. You have notification get pushed onto your phone. So when something comes out, like you'll be able to see or notify you on your phone right away. But this is the kind of thing that we're dealing with, where you can look at markets, everything going one way, and boom, thing goes the other way. So make sure you got your stops in there. Now, central banks, nothing on the docket, and then economic reports. Like I said, we have the inflation number out of the U.S. And if those inflation numbers remains weak, on the down low, we probably really don't see a whole lot of movement as far as the Fed expectation goes. So let's just jump into my favorite part, currency analysis. We're going to take a look at things one by one on charts, and we definitely have interesting things going on. So we're going to take a look at some charts this week. Now, let's just start with the crypto and the Bitcoin. You can see that Bitcoin is going sideways. And we got a support right here. We got a resistance right here. This is a sideways price action. And if you take a look at other cryptos, they definitely don't look as, they definitely look weaker. So here's the Ethereum, Bitcoin Cash, and then we got Litecoin. They all kind of looks the same. So nothing really exciting in the crypto market. Now, let's just jump into currency market because I think this is where there's more excitement. Now, let's just start with this good old ID US dollar. So remember dollar, I talk about how it's going to go on sideways. And in between, take a look at this little big wick that we had. So we almost made like a double top here. We got a big wick on, when the market gap higher, the dollar really gapped higher. And then when it pulled back, you can see that we had a nice 1, 2, 3 day pullback. Now, the question is that, are we really that negative? I know we have a -2 score, but I think what you need to make sure or kind of keep a close eye on is that support area. So if this support area breaks, I think that will be the next leg down, in the dollar. But if the dollar just hold on to this level and just go range bound, then I would say nothing really has changed in the dollar here. So this is the first week that we're getting a nice little orderly pullback here. But what we don't want to see is, if this kind of rebounds, then it kind of goes out the window. We need to see this remain weak, maybe consolidate here under this moving average and then break slower. That will be an indication that the dollar wants to go down. Now, we're going to talk about our opinions and we're going to talk about charts. And at the end of the day, we're going to take a look at charts and get that confirmation. Do I think it's going to break lower next week? I'm still questioning that because I think overall the employment report today really, was a good report overall. So I think that takes away those bearish bets. Economy is doing great. So I think we'll probably see some more sideways price action in the dollar. Now, the yen is the one that I'm really interested in. You can see the yen We got a nice little rally, and I talk about how the yen is moving. It's not a straight arrow up. We rally, we go sideways. We rally, we pull back, and then we rally, and we go pull back. So it seems like the buying those pullbacks on the yen is like the right strategy here. Overall, you can see velocity is going higher as well. So we're definitely getting a lot of movements, both on the upside and the downside. But once we start to break some key levels on the yen, I think that's where we can see getting more directional. So it's important to kind of watch what the yen is doing, and especially when we take a look at longer term charts. If we break out some key resistance levels, I think that's where yen can become way more attractive. But I think something to keep a close eye on all the yen crosses. Now we have the Swiss franc, and this is another thing that I'm excited about, because remember, this is a range that we're dealing with in Swiss franc, I think, for months. Now, is this a break? Well, it kind of looks like a break. All the other times we kind of come close to it and we just rally. We had a bigger wick. You can see that this thing was slowly moving lower, and then boom, we got 2 days on the down. So I really like Swiss franc on the short side, especially if this is a true break of that Swiss franc. Remember, Swiss franc is going sideways for the most part. Now, if this is a true break, I really want to get behind that. So we'll be taking a look at some of the Swiss franc currency pairs, but yeah, this is one I'm definitely excited about. And then we also have the euro. You can see the euro did break lower as well. So both the European currencies, euro and the Swiss franc, kind of looks weak. And then even the British pound, you can see this thing, had a rally. It consolidated for a bit, and then it just pulled back. So at this point, I think all European currencies kind of look weaker to me. Now the Canadian dollar, take a look at this this move here. We got a massive reversal, and then we went sideways, and then here we are getting into the bullish candle today. It's kind of telling me that the CAD is showing a bit more strength. Remember all the worries and all that negativity we had. It got to just push down the road. So what does that mean? For now, it's kind of going to bring a relief rally. So you can see that if you look at that range, let me go back to the CAD here. This is a resistance and this is support. This is a wide range. It can still get towards the resistance and then maybe stall over here. But I think that overall in the shorter term, it has a little bit of a bullish momentum here. After that big reversal, it did not pull back. It just made a base. So that's a good indication for the CAD here. So we don't have any news on the CAD. We had a great job support. So maybe CAD's likely to do a little better here. Now we have the Australian dollar, and this thing, as you can see, that is sideways on a currency basket. So, I want to see things on a currency basket that are breaking out. That would give us a good indication. The Aussie, the trend score is 0. So what does that mean? I'm not going to be married to any outlook. I can play either way. Now, when I take a look at the Kiwi, now this one is clearly showing more weakness. It's a -2. So overall, if I have to go short, I think the Kiwi looks like a better short here. But we're not really seeing that big, strong trend in these growth currencies. And that, again, could be because of the way we are in the broader markets. If we keep pulling back, I think that things could likely go sideways. Now, when we start to see a big rally in the market sentiment, things are running higher, I think then that will be a better chance for these growth currencies to break out. But for now, they are range bound. We got the support, we got the resistance. That's what we're dealing with. If we get a good breakout, just like how we were getting that breakout in Swiss franc, now that's where you need to play out that breakout strategy. But till then, I think it's likely to go back and forth. So here we are with our trend score. Take a look at how many things I have stacked up as a -2. All the cryptos are -2, but we got all the growth, the European currencies, euro, Swiss franc, pound. We got Kiwi, we've got dollar. We got 5 currencies as a -2. Now Aussie says 0, so CAD is looking a little bit better, and the yen. So I think what we need to focus on is really yen against everything else. And now, as far as the velocity goes, you can see it's kind of spread across the board. Yen is doing well, CAD's doing well today, and the European currencies are getting hammered here. So let's just jump into our possible trades ahead, and let's take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, as we take a look at the setup here, let's just kind of go into and see what the broader markets are doing. We still have, half an hour till the market close, but you can see that it's a pretty nasty candle today. But here's the 15-minute chart, and you can see how quickly market gets brought down on the news. And this is why it's kind of important to watch this, because right away you can see everything was looking fine. Markets were quiet, things were fine, and boom. So this is why it's important to have your stops in place. So when something happens, you get out sooner than later. And you can see that just ended the week on a little negative note. Now, let me talk about the yen here, because I find the yen very interesting. Let's just start with a very long-term outlook here. So this is a monthly chart. So we talk about like how going into this year, we kind of like more yen to the upside than to the downside, because the Bank of Japan, it seems to be turning a little bit more hawkish, raising their rates, while all the other central banks are either holding or cutting rates. So again, this is going back to 2022, when we had this environment where everybody was raising rates and the yen wasn't. That caused a big sort of a divergence. Then that's what we call a carry trade. A lot of people wanted to sell the yen and buy other currencies against it. Now the question is this a long consolidation and ready to break out? Remember, we had this big move back in July, and then we just went sideways since then, and it looks like it's breaking out. So again, this is why I kind of like more playing to the yen to the upside. I think it's worth that chance here to play more on the upside here. So here's the daily chart, and you can see that we got a big resistance right here. Now that could again be the next level of hurdle right here, 1, 2, and 3. If this can get above that, I think we probably expect higher highs and higher lows. Remember, like, things can go pretty fast in the yen, and right here we saw this movement here where we just got that big move on the upside here. We're getting something similar, but it's not but we still have quite a bit of wicks to deal with, a lot of volatility to deal with. So these are the ones that they're great to play. Get that move, it's going to pull back, but then buying those pullbacks is like a great opportunity. If I go into those 4-hour chart here, you can see that in between, you're going to see a lot of pullbacks. This is not one of those trades that are just one way without much pullback. This is a bumpy ride, but you can see that it's pretty clear the direction is more to the upside. So I think we probably continue to see that until we get to the point where then we probably see. Now for the dollar, does that mean the dollar is kind of topping out here? And again, that was a question that I had, going into, this employment report today. Is the next big move and the dollar is to the downside? And I think as you take a look at this chart, we are consolidating. We are not really breaking out. Even we had that big risk off move today. So you can see that the dollar didn't really break out. So it's kind of interesting today that the dollar didn't really react to it. So if this continues on into next week, and if we continues to stay below it, eventually what we gotta get is that we're gonna have a negative divergence where the 20 moving average is going to break below the 50-day moving average, and that will be a great crossover point. So this is the one that, again, you want to be not jumping the gun here, but wait it out till you get the clearest price action. Now, where I'm getting clear price action for short, here's the one, Swiss franc. As you can see, that this currency basket right here. So this is the one that I'm really looking forward to going to next week. Does this break lower? And if it does break lower, I think there's going to be a lot of opportunities in the crosses. So you can see that, like, going into like yen, the Swiss franc, this is still sitting at quite a bit of highs here. It hasn't really corrected a whole lot. So if it does start to correct, I think there's going to be great opportunities. Now the euro, do I like euro more than the Swiss franc? I think I like the Swiss franc setup a little bit better than the euro. The British pound, I think this is the one. This looks more like a bear rally to me, where it just made a lower low, lower high. I think British pound, I like it more further to the downside. So if the European currencies are turning negative, I think this is where the growth currencies are kind of holding it a little bit better. Like the Kiwi, the dollar here. This is the daily chart. You can see that this is not really breaking out way higher or lower. So I think this is a good time to sort of make that switch, where not wanting to short or not wanting to play the Aussie on the downside as aggressively, because you can see that this was a trade that was going on, and now things have kind of shifted here a little bit. So I think we're getting a little bit more neutral outlook here. The only thing I don't like about the Kiwi here, I think Kiwi's range bound as well, but this is again showing more weakness to me. So Aussie definitely looks like it's more getting stable here. So again, based on that, let's just start taking a look at some of the yen pairs. So dollar yen, you can see that this thing is breaking lower. We got a support right around that 149 area, but again, below that it's a good level to kind of break for, and this can fall a lot more further, and then again, that would be just getting to last year lows. As we take a look at the 4-hour chart, so what kind of setups that you see? You can see that like bear rallies are a great time to short, or if there's something happening in the broader markets like today, you can see that things were kind of fine, and then got a necessary bear rally and move lower. The 4-hour chart looks great over here. And again, you can go on an hourly chart. It will get a little bit more messy. I like the 4-hour chart here, more consistent. But here's the setup. We got a nice little bear rally, short, base, short. So you want to take advantage of those. So that's a dollar yen. But let's just take a look at other ones. The first one I want to take a look at is Swiss franc yen. I mean, look at that roll over here. We got the moving averages pointing lower. We got a little low base here, kind of going lower. So this is the one, looking to short off the bear rallies or looking for bases to short into. If I zoom out, you can see that this is getting to a critical point that we had last year. If this breaks below that, this is again, if you really zoom out, you will see like there's a lot of deflation that could happen in some of these yen crosses. And one of the things that we're kind of holding out on was whenever the central bank is doing so. And I think we have the central bank that's a little bit more hawkish. So this is where I think the possibility looks a little bit more possible at this time around, that maybe this can really deflate further. But just like I said before, this thing is in the early stages of that pullback, which means that it's going to be choppy. Once it starts to really accelerate, I think that's where things going to move a lot more aggressively. And again, if you want to use a reference, go back to 2022. 2022 when we saw the opposite. We saw back in 2022 when things really started to break out. As you can see, earlier was more choppy. Like earlier was like this. Sorry, that's 2020. So earlier was this, and then we just start to go parabolic a little bit here. So you can actually study those charts and see, okay, how you want to approach this. What's the best strategy to use? So Swiss franc yen looks great to me here. We can also take a look at euro yen. Same thing. We got a nice support over here, and that's a big range I'm dealing with. But if it breaks that support, I really like this. So that's what the daily chart's telling me. I can use the 4-hour chart in my sort of a favor here. And you can see that bear rallies, we got the moving averages going lower. Bear rallies are great opportunities to short into. So all these currency pairs definitely look good. Even pound yen had a big range. And you can see this thing is nicely rolling over as well. So a lot of these yen crosses that actually looks pretty good. I think I like these 4-hour charts to, give your trade enough room, and then at least you can play the strategy correctly. Look for those bear rallies, or look for these bases to short into. So that's the number one priority. We can also take a look at going to next week. What if the Swiss franc is the one really breaking lower? Now let's take a look at the Swiss franc against the dollar. You can see that this thing is looking a lot better. It is above that 15 moving average. We got a little double top right here, but same thing. This thing is back to these levels. I mean, we have tested this level multiple times in the past 2 years. If this can get above it, I think that's going to be, a great opportunity to play onto the upside. We also want to take a look at all the other Swiss franc crosses, like, for example, Aussie. Aussie's holding a little bit better, like, let's say Aussie Swiss franc. And you can see that these charts are pretty choppy, but if they start to really catch that traction, I think then we want to be looking at a wider net here. I don't love the setup here, but eventually when we start to see more consistent move in the Swiss franc, then I think that's where it will get more interesting. CAD Swiss franc, you can see that. Look at this big range that we're dealing with. And we got right up against that resistance here. We haven't broken out yet, but when it does, I think it's going to open the floodgates for further room to the upside. We can, again, do all the same scenario. Let's even take a look at Euro Swiss franc. You can see that Euro Swiss franc is kind of more sideways here. So this is where, again, Euro and Swiss franc, they're not really deviating as much. Now, as far as the dollar currency pair goes, remember I talk about going into this week. We talk about where we are, and we're kind of stuck in this range here. We're kind of stuck in this range where it's not really breaking out higher or lower. So this is, again, where you need to wait for that confirmation. Is the Aussie dollar really going to break out? Then we need to get that confirmation. Until then, I don't really want to jump on this. I think this is still range bound. Same thing, dollar CAD. I mean, wow, look at that crazy, reversal candle here. But if you just take a look at it where we are kind of right back into that range here. But this time around, we are kind of showing more weakness here on a break further. So this is, again, just telling me that, that for the shorter term, we are seeing a big correction in this dollar yen. The price behavior has changed. So instead of like every time it pull back and a rally, I think it pulled back and it's staying lower. So this is where I think it's a good opportunity where maybe both dollar and the CAD can outperform. So we're going to take a look at both the dollar and the CAD, currency pairs and see what kind of follow through we get here. Again, we're still in the early stages of the CAD here, but if the dollar CAD continues to break lower, I think in that case we'll probably see a continuation of that breakout in this Canadian dollar. So in conclusion, like the intraday volatility, I think will likely continue. We are kind of finishing off the week in a negative note. Going to next week, we'll find out about those tariffs and how what countries and what kind of reaction we get off of it. So I think that volatility will continue, but in that volatility, there's going to be opportunities on both sides. So I think you want to be more keeping the powder dry. And same thing, if you like a direction, wait for those pullbacks to buy into, like the yen that we're seeing here. I also really like the Swiss franc. I'm, kind of wanted to see if that is the true break. And if that is, then we want to put all the Swiss franc crosses up on our watch list and look for some setups. These tariffs, things got pushed. Something got to keep in mind is that, again, we got this reciprocal tariff that's supposed to come in next week. But all the other tariffs, like those 25% tariffs against Canada and the US, that got pushed by 30 days. So eventually that's going to come up again and it's going to cause that volatility. So just keep in mind is that we are not out of the woods yet. We still have to kind of work through these things. But, probably see a lot of tug and pull going on with these price movements. As always, follow relative center weakness. We want to take a look at the noise, all the charts. But at the same time, also take a look at relative strength of weakness, see those key levels when currencies are breaking out. And again, avoid those currencies that are not really breaking out. Right now, we definitely saw a lot of movement in dollar crosses. We're seeing a lot of movement in yen crosses. So just, focus on things that are moving, and that's where you're going to have the best opportunity. Thanks, everyone, for joining. Have a good weekend coming ahead, and we'll be back at it next week. Till then, take care.